What an eventful month it was for the US indices. We have seen the S&P and Dow hitting the record levels before erasing all the gains towards the end of the month and closing in red, while the Tech 100 did not fall much behind, and we have seen a greater swing here as well. Now, what to expect in the month of November? Yes, this is a critical month we have, and the coming week itself is going to onset with a massive move here, because see, the US elections outcome definitely will have an impact here on the indices. And then the next is the Fed meeting here and the rate cut hopes. So yes, in sum, the month of November is definitely going to be an eventful month. And how we can profit, where to enter, where to exit, what can be expected out of the S&P, Nasdaq, and Dow in the month of November and in the coming week, we will see with the help of charts and indicators. We'll do a multi-time frame analysis and arrive at the levels at which you can take a trade. Also, this is the channel which gives you two updates a day for the US indices. First with the Asia and Europe session, next with the US session, so that you can trade throughout the day with confidence, as we give you the bang on levels with a proper reasoning and a logical reasoning for you to take a trade at a particular price point and take profits as well. Thus, subscribe and press the bell icon to get the notifications. Do join the free Telegram channel for live updates and join the channel memberships here on YouTube to support the effort. Let's start first to look into S&P, followed with Nasdaq in the end. Now, at the end of every update, I'll be sharing the trading levels, so watch till the first. Let's start with the S&P and the monthly charts. See, after a massive up move here, since the lows here towards 4200, we have seen it hitting close to 5880, and now it can be a shooting star formation after the long bull run here. Now, if this happens to be the trend here, we can say, if this happens to be the reversal sign, we can say that the month of November, definitely we can look forward to a greater correction. But where, what are the indicators at which price point you can confirm that this is the reversal or beginning of the reversal? I see that first it has to get the support from 5650, which is going to be the prime support, and then 5550. If these two levels are taken, if you see S&P trading below 5650, 5550, the chances of reversal will be less here, and then direct lending will be towards 5400, and that should begin the reversal process. This should be the first candle in the process here. Remember, it took time for it to rise. It won't take much time for it to crash here. So this is something you should keep a note of. But when you see the last candle, you can see a swing here. You can see highs and the tail is also there. So right now, as long as 5550 levels are not taken, it is going to be difficult to conclude that the crash is coming. But yes, certainly the expectations are high and the indicators are also suggestive of same. But before we move on to the monthly indicators, look at the movement here in S&P. Look at the rise here, then a sharp correction, then a rise here, then a sharp correction, and this is the third wave here. And if you connect the dots here, though the highs are far above, placed far above, but right now I can say that the slope is changed, and we can look forward towards the bottom of the channel, where the lows here towards 5000 or 4800. But I think it is going to take a little time for it to move towards those levels. But before that, let's have a look at the indicators as well. When you see the indicators, too much of divergence from the 20 period calls for it to converge, and this is what is happening. And look, 5000 levels, this is also the 20 period moving average here. So a possibility towards this cannot be denied. What has happened 3 months back, we have seen a greater move, a greater swing in a single candle, where it has hit the lows at 5100 and recovered sharp. So yes, uh, a possible move towards this zone again cannot be denied. When you see the monthly stochastic, this is overbought. It has formed a twin top. It is now looking downwards. What has happened here? What has happened here? What has happened here? So every time on the monthly stochastic, S&P hits an overbought zone, the chances of drop increases. And as I have shared in my previous update, in my daily updates as well, sooner or later the indices has to come back. The sooner or later indices has to begin retracing here. So the month of November is possibly going to be the one from where this retracement starts. Look at the MACD on the monthly charts. A sharper recovery, hitting the highs, record levels on the monthly charts. Now signs are there that we are looking forward to exhaustion here, and you can look at the candle sizes. This have also started to diminish, which means next 2 or 3 candles are going to be the bearish one, where it can convert sharply, initiate a crossover, and this crossover might bring it to the bottom again. If you look at S&P, this is how it has been trading, so it can come down towards the lows here. Though on the RSI part, still there is room for further rise. See the escalation here, see the rise here. This time still it has room for further rise. So again, till 55.50 in the month of November, do not conclude that it is a crash yet. Coming to the week, on the weekly charts, look at the formation here, and since the run here, since the bigger retracement, look at the rise, then the retracement, rise, retracement, rise, retracement. Now this black line, the 20 period moving average, is proving out to be the point at which it is finding the support here. Despite the drop, we have seen the candles closing above this, and that is why also I say, now see, this is right now sitting at 5600, and thus it is very very important for the S&P to trade below 55.50 and close a candle below 55.50. That will confirm that now we are looking forward to a move towards the 50 period moving average or close to 50 period moving average. Now look at the point here, what it is suggesting. After a straight bullishness reversal sign, first bearish candle, we can expect a second bearish candle in succession at least, which can take the S&P towards 5600 in the coming week itself. But for it this to happen, first it needs to break below 5680, which is going to remain a prime support. The second one is at 5650, and then direct landing is towards 5600 in the coming week. Below 5600, we are looking forward to a greater down move towards 5550, and if it breaks 5550, I think that is the beginning of the down move here and the correction here. Stochastic has already starting to correct from the overbought zone. In the S&P, I have been highlighting this, that it has stayed overbought for weeks, and now time for it to hit the lows here. RSI, look at the, before we move to RSI, look at the MACD here. See MACD, the stronger rise, then a retracement, then a lower highs, then a retracement, lower highs, and again crossing over here. Now this time this crossover is going to bring significant move. It is not going to reverse because there is hardly any up move left, and now we can say a possible correction towards the bottom edges is strong. Look at the formation here, it is struggled here, and then this sharp correction has appeared. Now this is possibly going to be the event in the month of November that this could begin this drop process. Now remember, the new government in the US definitely is going to have much of the challenges here, not only on the geopolitical front but also the internally. The debt ceiling which was raised in or eliminated in 2023 is now going to kick in 2025 January. And if the control of new government or the Senate or the Congress is not going to be there, or there is a situation where there is a conflict, definitely this debt ceiling thing in the January 2025 is going to bring a catastrophe here. So this is something which is going to be definitely fall heavy on the market. RSI here is looking down. Coming to the daily, on the daily charts, after a while now the prices are trading and close below 20 period, though it has formed a good support at 5700, 5680. Now only and only if you see it is staying below 5680, we can look forward to towards 5640, 50 at the first target and 5600 at the next. Any drop below 5600 is a bearish sign here, where we will look forward to a greater cut. What we would expect here, we can expect the next landing towards 5400, which is going to be a greater support. Stochastic has fallen to the bottom. The MACD, look at the MACD. In my daily update, I have shared this triple top, triple top, triple top. What has happened? What has happened? What could happen? So now this appears that S&P is gearing up for this move here towards the bottom. RSI has dropped as well. On the 4 hour, the observation is more or less same, retracement towards 20 period. Now see where it, I will say that it has turned bullish only and only if S&P breaks beyond 58.50. You can say that the bulls are back and you can look forward to a record run again, and this time if it breaks beyond 5850, 5880, you can look forward to 5950 and 6000 levels as well. Remember, these are markets. It shows you something else and delivers something else, and thus we need to be watchful here. If you see it is staying above 5780 in the coming week, we can look forward to 5800, 5835, and then 5850. If 5850 is taken, consider that as a reversal. Stochastic has retraced, the MACD is at bottom and the RSI is at bottom as well. So now we have seen the charts and indicators for S&P. Before moving to Tech 100, let me give you the level. Now let's talk about the levels to buy. See, first of all, the month has begun when we are talking about the complete picture for the rest of the month, for the month of November, and this is definitely going to be swingful. Remember, till 5800 or in fact 5850, it is only to be treated bullish if it breaks beyond 5850, where you can say now the chances are high that we can look forward to 5950 or 6000 levels as well. Till 5850, at least we need to be cautious here. Do not treat this as bullish. It can reverse, it can crash again, it can drop again. While these are the levels which you should watch out for, 5780, 5800 is going to be a prime resistance zone, and in fact 57, now 5060 zone is also going to be one of the key resistances. So till 5800 there are greater resistances. While on the downside, I will say for the month of November, I will not treat this as bearish as long as 5550 is not taken. Below 5550 is where we are looking forward to a greater correction, where in fact 5400 or lower levels can be seen. Now 5400 from the current price point, it is almost 5%, and 5% means nothing. If it is a crash has to happen, 5% can be delivered in few sessions or even a single session as well if there is a catastrophe has to happen. But right now the movement is not very much, I can say, supportive of such a greater crash. But yes, this could begin, or this could be the beginning of the down move here. Below 5550, certainly the chances of reversal will be very less, and we can look forward to 5400, 5200 in the next few weeks. So take your positions accordingly. Let's move to Nasdaq. Tech 100 on the monthly chart. See the last candle here, we have seen it struggling to break beyond the record high levels. At the same time, the downside was also limited here. And interestingly, this has closed the month with a doji here and begun the new month on a slight bullish note. Now, important to note, till 19500 400, that is the first, and 19200 second. As long as Tech 100 stays above 19200, this should not be treated as a reversal. This should not be expected, or this should not be confirmed as a crash in making. Only and only if you see it is staying below 19200, we can say now we are looking forward to a move towards 18400 and 18000 levels, which are very much feasible, very much possible. Now, the point to note here is these two candles are very important, which are delivering higher lows, and we have seen it delivering higher highs as well. Now, the coming week is also going to remain critical. A move beyond 19500 or 400 is the confirmation that now a greater down move, and below 19200 is where you can say a greater correction is expected here in Tech 100 prices, where we can expect it to in fact move towards 17,000 levels very soon. Now look at the near term picture for Tech 100. So look at the rise here, then the retracement. This was a very minuscule rise and the retracement has appeared. Now a stronger rise and a stronger pullback. Now this is a further stronger rise. This invites for a further stronger pullback. Where are the lows here? The lows here are far below towards 14,000, towards in fact lower levels. But yes, this may take some time for this to achieve this. Let's have a look with the help of indicators. When you talk about the indicators, see, already we have seen the whenever you see a divergence, it starts to converge. This time what has happened, the last few candles, see, there was a move towards 20 period, and then we have seen it recover. And now this is important as it is already taken as support. It is possible that it can give you a breakout here. Now remember, these are markets, and as I said, till 19200 on the downside is respected for Tech 100. We should not be treating this, or we should not be expecting a crash here, at least for the month of November, as long as 19200 is not taken. Now it is only to be treated bearish once 19200 is taken. else the chances of a recovery, the chances of a reversal is high. And on the upside, as long as now 20,700 is not taken, we have to be careful with the bulls as well, because it is possible delivering lower highs, attaining lower highs, the reversal process initiate. And see, when we talk about this, here we are talking about a range of almost 6 to 7%, which is going to be an indecision zone for Tech 100, and which is going to be a zone for us to conclude whether a crash is in making for Tech 100 or not, whether we are looking forward to a massive reversal or a crash from here or not. So, as I said, in between this zone, and see, 6% to 8% is hardly nothing for Tech 100. Looking at the swings which we had seen in the recent past, specifically looking at the swings which we had seen for the last few months, remember, when it can rise strongly, it can also, and if it can swing strongly, it can deliver the same, and it can crash this in the same way as well. So this possibility which we are looking at makes us a bit, you can say, indecisive for the bearishness, for the confirmation of bearishness in Tech 100. First, it needs to break below 19,500, 400, and then 19,200. Once these two levels are taken, we can definitely see that more bearishness or more crash can be expected. When you see the stochastic has for Tech 100, it is dropped and it is looking upward, it appears that there is further possibility of an up move. While on the, when you see the MACD, it is almost hit the top here. There is still room, but you can notice, see, one convergence, second convergence, and now it is almost at the cusp of it. The candle sizes have started to diminish, and sooner or later it has to cross over for sell. Right now it is still in green, and the RSI is just entering or staying very close to the overbought zone. Though in the recent past, you can say we have seen highly elevated levels here for Tech 100. So that is why also I say, on the downside, to conclude that a crash is in making and we can look forward to greater correction, we have to watch out here with caution. Now look at the weekly charts as well. If you look at the weekly charts, look at the rise, the retracement, rise, the retracement, rise, the retracement. Now here, this is the bottom it has formed, and now it is trading in this bullish channel. Where are the lows here? Towards 18,800. If you look at the last week, see, first of all, in my weekly reviews I have mentioned that the bullishness getting diminished, and this is a reversal sign which it has shown. Hitting higher highs, we have seen a sharper reversal, it has hit lower lows as well. Now it is very very important for the coming week for it to trade first below 19,800, then 19,600 levels, 19,400 levels. So these levels are going to play a major role. These are also the 20 period moving average. Once it stays below, because see, bullish candles, reversal sign, first red candle, appears that there has to be a follow-up candle, and this can be massively bearish. So this possibility we should watch out with caution. Tech 100 in the coming week may deliver a correction here. This could be the beginning here, and then we should watch out for how it behaves till 19,200, and then below that definitely we will look forward to a move which can take it towards this zone at 18,400. Stochastic here is overbought and is starting to look downwards. Likewise with the if you look at the MACD, triple top is formed, retracement, and it is again now crossing over for sell, and a bearish candle in the coming week will confirm that now we are looking forward to a move like this. What has happened here, after staying or trading sideways with a negative slope, we have seen a greater correction. Triple top is formed, and now it appears that it is ripe for a greater correction. RSI is near to the top as well. Coming to the daily, look at the daily charts. What is happening here? See, it is traded below 20 period after a long time, and now see, after hitting the lows, it is trying to bounce back. Look at the Bollinger Bands, these have narrowed as well, and it has covered the journey from the top to the bottom in just two candles. Now specifically the last candle, which is started with a little recovery, this suggests that there can be a little retracement on the upside. On the upside, specifically in the coming week, we have to watch out till towards 20,400 levels, which should remain a greater resistance zone, and bullishness is confirmed only and only if it trades above 20,400. Stochastic has dropped here. MACD trading with divergence is staying bearish. In my daily updates also I have shared this, that it is stayed flat and now starting to look downwards, so more bearishness may prevail. RSI has dropped. On the 4 hour, the observation here is same. The crossover here is definitely a bearish indication, and this crossover has appeared with such a great down move here, or you can say the greater slope here after almost a couple of months or more. See, this was the bullish cross and this was the bearish cross in the month of August, what we had seen. So yes, after a couple of months or more, we are seeing this crossover with such a down slope, and thus at this point we have to be cautious. Look at the formation on the 4 hour charts. It is under retracement. There is a possibility that we may see a move towards 20,200, 20,300 levels, but still I will say you have to be cautious. Only bullishness is about 2400 levels and the daily levels, which we will update with the daily sessions here. But for now, on the weekly charts, it appears 2300, 400 is going to be a greater resistance. The stochastic is retraced. See, MACD has also dropped, and thus it appears that the first session may look forward to a recovery where it can move towards 2200, 300 before it shows any reversal. RSI has dropped as well. Now, considering, let me give you the trading levels and strategy here. And before I provide you the levels, if you want to learn this art of trading, join my mentorship batch. And if you just want to trade as per the signals, be a part of my signals channel or Telegram. Connect with me, write an email or ping me or Telegram for your queries. And if you're looking forward to a broker which offers you a free account with lowest spreads and no hidden charges, you can find the recommended broker link also in the channel and video description. First, let's talk about the levels to buy. You can buy here at 20,100. Expect 2140, 150 as the next resistance, and then 2200 will come. Beyond this, 2240, and then 2300. Now till here it is going to be a greater resistance for tech 100 to break beyond. It is possible that it can achieve these levels once before reversing. Here it can show you swings as well. Beyond 2300 is where slight bullishness may prevail, and then too I will say exercise caution for 2360, 2400. Now see, very nearby resistances, we cannot avoid it. On the upside, we have seen these levels playing out well. And then 2500, once it breaks beyond 2500, chances will be high that we may see a move towards 2600. Beyond this is where 2750, and if it breaks this, sky is the limit. We are looking forward to 21,000 plus levels. I will update the levels towards the next weekly review, but right now I think it is going to be difficult for it to break beyond 2750 levels on the upside. But yes, if you see a move above this, stay bullish. We are looking forward to 21,000 levels very soon. On the down, sell here at 19,970. Expect 19,920, 19,840, 19,800. Once it breaks beyond 19,800, stay short. 19,700 the next target, 19,610 the next, 19,520, and then the most important one, 19,400. Beyond 19,400, accelerated bearishness towards 19,200. Breaking below this, you can say 18,800 will be seen, and then I will wait for 18,400 levels, which are definitely achievable. Here below this, greater correction can be expected. Now the levels here on the downside, 19,200, very critical. See, below this the bearishness will accelerate, and this is 400 is also critical, 600 is also critical. So these levels are something you should watch out for. Below this, you can say that now the bears are back. Take your positions accordingly. Now let's move to Dow Jones. For US 30, see, it has hit the highs, it has hit the record levels and closed the month in red here at the bottom. Now this is important. This could be a shooting star for US 30. If you see it is staying below 41,500, we can say now the bears are back in action, and we are looking forward to a correction which is going to take the price towards 40,000 levels. And once it stays below 40,000, the next target is going to be further low. Right now, if you connect the dots here, you will find that US 30 is trading in this bullish channel where the lows are here at 40,000. And once it comes out of 40,000 and 38,000, remember, a greater correction is due here. Let's also have a see. First, before we move on to the indicators, look at the formation rise correction. Greater rise, greater correction, again a rise. It is bound to deliver a correction very soon, and it is reversing from the top of the channel. The lows of the channel are now almost at 35,000 levels here. So this is the point you should keep a note of. Let's turn on the indicators, and when you see the indicators, divergence of the price from the 20 period calls for it to converge, and also the 20 period sitting at 38,000 makes it a very strong support here. Stochastic here on the monthly charts is overbought, trying to cool down. After forming a twin peak, it is ready for a retracement. When you see the MACD has also hit the highs, and it appears it may start to converge crossover, though it is possible that it can wait for 2 or 3 months before crashing. This one possibility we should not ignore. RSI is at the and on the weekly charts, look at the divergence of the price from the 20 period. A greater divergence calls for it to converge. Where is the 20 period sitting at? 41,000, first support zone, and then 40,000 the next. These two levels are need to be taken in order to confirm the crash here. If you look at the formation for the last few weeks, you can find out a very good support is formed here at 41,900 zone. And now in the coming week, it is very, very important to move. Now see, first bearish candle, a swing here, and then the next candle possibly is going to remain bearish. First on the upside till towards 42,700. We should not be treating this as a reversal. See, possibly one bearish candle, a swing here, and this candle is, even if hits the highs at 42,700, the chances of a move towards 41,000 levels cannot be denied. So for the coming week, at least till 42,700, you need to be cautious and alert. And for the month of November, also we have to watch out here, because 42,700, 800 is going to be the zone beyond which we can expect slight bullishness here. Stochastic has dropped sharp. The MACD is also on the verge of a crossover. This crossover can initiate the reversal process here. RSI dropping. Coming to on the daily charts, what has happened? See, this is trading in this bearish channel. The highs at 42,500 needs to be taken, and then the median of the Bollinger Bands. If these two levels are taken, then the chances will be high that we may see US 30 at 4300, and hitting the zone also it can reverse. Again, I am saying I will not be treating US 30 as bullish as long as the top is not taken, because this top has become a greater resistance at 43,000 43,350 levels. So this levels need to be taken in order to turn bullish. That is the first part to it. While on the downside, look at the support levels here. These are definitely greater support. It needs to break below this towards 41,500, and once 41,500 is taken, we are looking forward to 41,000 and 40,000 levels at the next targets. Stochastic at bottom, MACD trading bearish, and RSI has dropped here. Coming to 4 on the 4-hour charts, after the crossover, this is trading bearish. Moving averages definitely suggestive of bearishness. Look at the formation here, and now it is trading in this channel. Once it comes out of this channel, we can expect a little retracement, which suggests that 42,500 is going to be one critical zone for it to break past by. And once it stays above 42,500, we can look forward to a greater up move towards 42,700, 42,800 as the first target, and 43,000 as the next. Hitting 43,000 also, we can expect a reversal. Stochastic at top, MACD has formed a double bottom looking upwards. This suggests that 42,500 can be expected, and the RSI has dropped. So as I said, there could be swings possible. The month has just begun, and the coming week is definitely eventful, where not only the US elections, but also the Fed is going to be one driving, and thus retracement followed with a drop is what you can expect. So the highs could be limited towards 42,700 or 43,000 levels, and then the reversal process should kick in. So now we have to enjoy both ways. First, you can buy here at 42,100 levels. Expect 42, see, 42,180, 42,300, and then 42,500. Now 42,500 is going to be the most critical one. These levels here till 42,500, these three levels are definitely critical for it to break beyond. Once it stays beyond this, you can expect chances are high that we will see it 42,700 and 42,800 levels, which is good resistance zone. The next one beyond this, we will see it at 43,000 levels, and if it breaks 43, chances will be high that we may see it hitting lower highs. If at any point 43,200 is taken, I will say now it is turning bullish. We will look forward to 43,500 and 44,000 levels. Chances are less though, but yes, keep your eyes and ears open. Anything and everything is possible. These are markets. On the downside, I will recommend a sell now at 42,000 levels, but expect 41,920, 41,820, and 41,700. Very good support here. Below this, you can expect 41,500. Extremely important levels is going to be there at 41,500. Below 41,500, chances will be high that we are seeing 41,200 and 41k. And once it drops below 41k, direct lending is going to be towards 40k. This is not only applicable for the next week but for the rest of the month of November as well. And below 40k, the chances will be high that we see it at 38k here. Now, see, we are talking about a 5% correction here, and 5% hardly means anything. Looking at the moves which we had seen in the recent past, a possibility of a correction on the downside towards 5% means 38,000 is very much possible. And if it 5% to 10%, rather, I will say 5% in the month of November is possible. That means 40,000, and below 40,000 is where we can see a greater move towards 38k, making it a 10% correction, and that will confirm a crash here in the US 30. Take your positions accordingly. Like, share, subscribe, and comment. Do not miss to watch the twice a day updates which I share for US indices. Do join the free Telegram channel. Do join the channel membership here. Have a great profitable trading week ahead, and have a great profitable month of November, and a happy weekend. Thank you.